I don't think Bitcoin is volatile if you're an investor. If you're a hodler, if your time horizon is 1 year, or if it's 1 year, you're a short-term investor. You can find like 2 or 3 times in the last decade when it wasn't great, but it wasn't awful. If your time horizon is 4 years, you can't find a time when it wasn't working. If I take anybody on the world, and if I take a microscope, and I zoom in, and a magnifying glass, and I zoom in by a factor of 1,000, I'll eventually find a blemish. Like if you look at Bitcoin trading every week, you'll find a blemish. If you look at it every day, you'll find more. If you look at it every hour, you'll find more. If you look at it every minute, you'll find plenty. But if you zoom out to a decade or 5 years, then you'll have a different view.
Michael Saylor is a vocal advocate for long-term investment in Bitcoin, citing its potential to yield substantial profits over time. Contrary to common perceptions of its volatility, Saylor argues that Bitcoin has consistently trended upwards since its inception. In his recent interviews, he emphasizes the importance of maintaining a long-term perspective, suggesting that while short-term traders may see volatility, those with a longer horizon perceive Bitcoin as a stable investment and store of value. Saylor's argument highlights the contrasting viewpoints between short-term traders and long-term holders regarding Bitcoin's stability. While the former may perceive volatility, Saylor suggests that holders see Bitcoin as a dependable asset with potential for significant growth. This perspective underscores the value of holding on to Bitcoin for extended periods, rather than reacting to short-term fluctuations in price. In the concluding segment of his interviews, Saylor discusses Bitcoin's potential to disrupt traditional assets and become the primary store of value. He suggests that Bitcoin's unique properties position it as a superior alternative to traditional assets, indicating a transformative shift in the financial landscape ahead.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
To be clear, trading is speculation, and traders see the world in short-term moves, and they're always, and maybe traders love volatility and traders love controversy. And traders love this debate because it creates that volatility. But this is an engineering issue for me. This is the year is 1910. People are wiring their houses with electricity. And you're asking me at what point I'm going to turn my electricity off, or you're telling me how eventually people are going to get tired of electricity. And then you're telling me that wouldn't I really want to convert back to horse and buggy and manual labor to take some off the table because electricity is a scary speculative thing. And I'm like, no, it's running water, it's electricity, it's automobiles. It's not a fad, it's the future. It's not a bubble, it's capital flow. When all the money is leaving the peso going to the dollar, that's not a bubble in the dollar. That's capital flight from a collapsing asset or a collapsing currency that people have lost confidence in. Just like the stampede to the internet. Like, would you ask a company, when are you going to stop using the internet? Are you going to stop using it in a quarter because you've used too much electricity and internet? And I would say, and you're like, well, I noticed that your Facebook or your Twitter hits were going down, or they weren't as high, so you just have to turn off your thing. My view is this is all just short-term technicality. And by the way, I don't think there's a single trader with all the data in the world that can predict the future. Like, for example, you're going to go and pull every line of data of every second. If you knew every trade of Bitcoin since 2010 to today, how would that be a better indicator of the future if the future is based upon things that are changing? It's like, this is the thing I said to Keith McCullough. Keith wanted to talk about quad models and correlating Bitcoin performance to the CPI and inflation and deflation, and he's crunching numbers. And just The Fibonacci retracement is not going to determine the future of Bitcoin any more than the Fibonacci retracement is not determining the future of electricity, right? And inflation is not going to determine the future of running water. And if the economy stops inflating, or if the CPI goes up by 3 or goes down by 2, it is not going to stop a tidal wave from blowing into your beach. If you're standing on the beach and there's a tidal wave coming, the first order issue is that's a tidal wave. And you're going to tell me, well, in the last decade, all of our statistical models didn't predict a tidal wave, and or something. It's like, it's irrelevant because it's an engineering phenomena. So a trader that wants to preach to me about what they think should happen based upon 2017, in my opinion, is irrelevant, right? And let's come back to the key point. If 10 billionaires choose to buy $5 billion or $1 billion or $2 billion worth of Bitcoin each, all of your models are irrelevant. All of your history is irrelevant. It's like everything you think you know how things are going to work out. And how about all the statistics of New York City for the past decade? How relevant are they to predict what happens in New York City this month? Trading is not a way to make money, by the way, in my opinion. The people that make all the money are people that predict the future. Henry Ford, right? John D. Rockefeller, right? Andrew Mellon. What did they do? They invented aluminum. They invented oil. They brought us cars, they brought us electricity. Andrew Carnegie brought us steel. Mark Zuckerberg, not studying some statistical model. How did he get rich? He kept Facebook stock. He didn't sell it.
Right.
Jeff Bezos, he kept his stock. So at the end of the day, none of this statistics matters. None of the trading matters. None of the volatility matters. These, people that are living in their little world, studying their Fibonacci retracements and preaching with incredible conviction about the upcoming expected 60% retracement or 80% retracement, they're overlooking this fundamental issue, which is if Bitcoin is a digital monetary network, and if enough people with money and power decide to adopt it, it's going to go up and increase by a factor of 100 or 1,000, and there's nothing you can do to stop it. And its past is completely irrelevant to its future. I think that Bitcoin is going to grow to be digital gold, and it's going to grow larger than gold. And at some point, that will bring back price discovery to currencies, to bonds, to stocks, to monetary indexes, so that you can imagine there's $500 trillion worth of assets in the traditional system, and Bitcoin is irrelevant. And gold is not playing the role of enforcer of monetary discovery. It's not working. We're not on a gold standard. Gold is not going to be 20, 30% of the monetary energy. It's not replacing safe haven. It's not replacing cash. It's not replacing bonds as a safe haven asset. Right. People are using Tesla as a safe haven asset, or as a store of value right now. So gold doesn't work. The world needs a safe haven store of value that's sound money. As Bitcoin grows, it's not going to replace the currencies. It's going to be the central core. It's like granite bedrock. You're going to build New York City on granite. You're going to see Bitcoin become a 10 trillion or 20 or 30 or 50 trillion dollar thing. People that were buying stock indexes as a store of value will say, I think Bitcoin's a better store of value. Instead of taking 15% in the S&P, why not take 200% in Bitcoin? So why in the world would I ever buy an S&P, a Spider index or Vanguard 500 index as a store of value? And the answer is people are afraid, fear, uncertainty, doubt, not, ignorant or fearful or something. So as we regularize or normalize Bitcoin as an asset class, I think that it's going to demonetize those indexes, and it's going to rob capital from bank accounts. I mean, who's going to put money in a savings account that yields 0% interest, right? It's already, Square and PayPal are already siphoning off money from a savings account, right? So what you're going to see there is is Bitcoin becomes, people have talked about it. They're like, what is it? It keeps everybody else honest. It's like the sovereign enforcer of integrity in the world, right? What if there was one country that anybody could move to that was fair and equitable? Then if another country were to abuse your rights, you would presumably, blink and move to the fair and equitable country.
Right.
Well, we can't quite do that, but we've created cryptocurrency in cyberspace, which is fair and equitable. And if you live in Venezuela or Nigeria or South Africa or Lebanon or Turkey or Argentina, you have the option to move your money. And it's pretty obvious, like it would be irresponsible to not. It's not a bubble, right? You wouldn't describe Bitcoin's appreciation against the Venezuelan bolivar as a bubble. You would describe it as rational capital flight as a currency collapses into another currency that's not collapsing. Right. So I think what'll happen is, as you see that flight, governments have to respond to that. As that starts to happen with the dollar and the euro, I think that people will realize that when price discovery returns, then interest rates will begin to matter again. Let's go back 5 years, right? What used to be the reason that a country wouldn't drop their interest rates to zero? Because if I drop my interest rates to zero, everybody attacks my currency and all the capital flows from the pound to the dollar, or it flows out of the euro, or it flows out of the Turkish lira, or it flows out of the whatever. And so your currency collapses. And so the check on irrational behavior is capital flow. And I think that what we're going to see here is we're going to see more, and the check on irrational asset pricing is capital flow. Why are stocks overvalued? Because people have no alternative. Why are bonds overvalued? Because people have no alternative. If there is an alternative, the capital is going to rationally flow to the technically superior asset. And it seems pretty clear, right? If I have something which is reliable, that's going to appreciate at 200% a year, that you can't inflate away, it seems technically superior to something which is yielding 1% interest that is being inflated.
Michael Saylor emphasizes the transformative potential of holding Bitcoin, suggesting that its volatility is relative, especially for long-term investors. While short-term traders and journalists may perceive Bitcoin as volatile due to their constant exposure to market fluctuations, Saylor believes that for investors with a horizon of 4 years or more, Bitcoin's volatility becomes negligible. He underscores the importance of zooming out and adopting a long-term perspective, contrasting it with the short-term focus of traders who track daily fluctuations. Saylor encourages investors to consider Bitcoin's decade-long track record of consistent growth, predicting its evolution into a digital store of value surpassing even gold in market cap, potentially reaching trillions of dollars. He views Bitcoin as a superior alternative to traditional assets like stocks and bonds, particularly in an environment of low interest rates and inflation. With Bitcoin's increasing popularity, Saylor's bullish predictions are gradually materializing, hinting that they may soon become fully realized. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.